Now, an unagreed case would be where the IRS has has issued a NOPA, and made a internal determination that there is a problem with a return, and you as a taxpayer disagree. So if you try to negotiate with the auditor at that time, you must realize that the field agent, the revenue agent who's actually handling the audit, has very limited authority to settle issues. So that agent's responsibility is to determine if a transaction is appropriately reported. We'll discuss a little later the role of IRS Appeals, which is where your opportunity really is to try to settle an issue. So if at least one issue remains unagreed, the revenue agent will then issue what's known as a revenue agent's report and a 30-day letter. The 30-day letter, again, is not the notice of a deficiency, but it's an indication that you have 30 days to file what's known as a protest with IRS Appeals. So when you get the 30-day letter, you have three options. You can agree with the proposed deficiency and execute what's known as a Form 870. That will permit the IRS to make an immediate assessment. If you do so, you waive the right to a notice of deficiency and forfeit the right to go to the tax court. But if you pay the tax, you still reserve the right to file a refund claim in federal court. Alternatively, the taxpayer, you can do nothing and wait for the issuance of a 90-day letter. Now, the 90-day letter is what's known as the statutory notice of deficiency, and that's a key document to consider, particularly if you want to go and dispute your case in front of the tax court. And third, the taxpayer may file the protest and proceed to IRS Appeals. So now let's talk